Okay, good morning, everyone, and good morning, our valued clients. We are glad to welcome you to our platform this morning again to attend our breakfast program. Thank you very much. So I will be taking you through the equities market review, and then subsequently the fixed income market will also follow. So last week, despite the protests across Nigerians, all the states of the federation, we also noticed that we still had 5 trading days of last week, even though some days we had lower trading activities. But on Monday, market opened on a bearish note. It lost 7 basis points. And then for the entire 5 trading days of last week, so Monday to Thursday, bears dominated the equities market. So it was 7 basis points on Monday, Tuesday, 31 basis points. And on Wednesday, we also had the market also lost 6 basis points on Thursday, 42 basis points. It was also on Friday, the bull took over the markets and the market closed with a 40 basis points. So in terms of week-to-day performance, so market week on week lost 0.46%, and that actually took our all share index back to 97,745.73 basis points. Our year-to-date return has also gone down to 30.72% because of the impact, the negative 4 trading days we had throughout of last week. So looking at turnover in terms of shares they were traded, we had 3.39 billion units of shares traded, worth 52 billion. By the time we compared that to what we did in the previous week when we had 3.56 billion units of shares, worth 47.2 billion. So naira, that's 47.2 billion naira. In terms of value, it was lower by 5%, while in terms of volume, it was lower by 5%, while in terms of value, it was higher by 10.52%. So financial service industry, we continue to enjoy the patronage from valued investors in terms of trade turnover for financial service industry. The financial service industry still cornered the larger chunks of the entire total unit of shares traded with a 2.8 billion unit worth 36.995 billion, with a contribution of 84.73%. That's for the volume, and then for the value, 70.73%. So, and then we also observe in the course of last week, top trading stocks were the major the two tier one banks and one of the second tier one banks. So it's another tier two banks, Fidelity Bank, United Bank for Africa, and the Zenith Bank. They all the three banks accounted for 20.2 billion units of shares, worth 28 billion. And then looking at that contribution to the entire turnover and to the entire value, and also accounted for 61.87%. That's for the volume, and then for the value, 53.94%. So, and then our market capitalization also declined by 19 basis points to close at 55.50 trillion naira. So, and then in terms of our sectoral performance for the last week, we, unlike the other week when all major indices declined, this time around for the last week, 2 out of 5 major indices under late capital coverage closed positive. NGX insurance closed positive with a 1.59%, and we could trace that to the activities level around Asset Marshall Insurance, Cornerstone, ICO, and then the WAPIC Insurance. While for the oil and gas, which also gained 4.27%, we also saw renewed back interest in Eternal Oil. We saw Oando also moving up. We also saw Total Energy Nigerian PLC also moving up. Those three companies' activities level also contributed to the NGX oil and gas. While for the banking, we saw profit taking across the tier ones and the tier two banks. So week on week, NGX banking lost 0.48%. Consumer interest is not also left out, also lost 3.3%. We saw price of Dangote cement Dangote sugar coming down. And we also saw Nestle Nigerian PLC also coming down, NASCON also coming down. because that sector has been facing some FS losses due to macroeconomic challenges. And then NGS Industrial also closed almost flat because we could not see any price movement in the major companies under that index, the likes of Dangote Cement, Notori, Fertilizer, Beja Paints, and then the Boa Cement. Their prices almost closed flat for the entire last week. So our performance week today, we are still at a negative 0.046%. Month to date has also gone to negative 0.3%. Our quarter to date, we are still at 2.3% negative. Year to date return still currently stood at 30.72%. So if you remember the other time, while we gave a scorecard of the three major banks that indicated interest to raise money from the public offer and right issue. So last week we saw Zenith Bank and the FCMB, and we did promise the House that we'll come back to come and give a scorecard of the other two banks. So we were able to include FCMB and Zenith Bank to this scorecard. We've done the one for Access, Fidelity, and GTCO. So for the FCMB, the board has also indicated interest to raise additional 15.2 billion in addition to the total outstanding shares of 19.2 billion. And that will take the new share outstanding shares to the 34.4 billion after that's a post-capitalization total outstanding. And then Zenith Bank is also raising 8 billion combined offer of a right issue and public offering. They're also raising 8 billion units of shares. That will be adding to 31.4 billion, and that will take their new share outstanding to 39.40 billion. So in terms of our analysis, the scorecard for the capitalization, because it is important we advise the House as to which part are they going to follow, whether to buy. We maintain our position that the Access Bank, Fidelity Bank, and GTB, they are good to go. So we're also coming out again to tell you boldly that FCMB is also good to go in terms of buying, because we are also looking at those financial metrics, the profit after tax. We also did our extrapolation for FCMB, which is in line with their half-year results, because all the banks, I think it's only FCMB that have released their second quarter result, and now extrapolation for the projected profit after tax for 2024 is almost in line with the half-year results. So we are good to go with that. We're expecting them to make 119 billion for the final profit after tax for the full class for 2024, and then the earnings per share will move to 3.46 naira, and then the earnings yield will be around 43.58%, and then dividends yield will be at 0.01. So, and then we are looking at a P ratio of 2.29 times, and then rating is still bad. While for Fidelity Bank, Zenith Bank will see extrapolations to their profit after tax to 5.6 billion after removing exceptional items, foreign exchange gains, and looking at income made from the core banking operation and from other line of businesses. So their earnings per share for the 2024 is expected to move to 13.87 naira. Earnings yield will be at 47.73, and the dividends will be at 11.11%, and then the P ratio, we're expecting P ratio to go to 2.1 times, and then we are still placing it on buy. So in terms of recommendations, so the 5 companies that have indicated interest to raise money, either public offering or right issue, that we have done the exercise in terms of looking at their financials and other key metrics, I think our investors, you can take advantage of that. But however, we also advise that if the price is also trading in the market lower than those right issue public offering, you can also buy from the market. I think we did that for some of our clients last week for the Access Bank, and we'll continue to do that as the market is also coming down. We haven't seen price coming down for Fidelity Bank, while Access Bank also enjoys some price depreciation, and some people took advantage of that. We will still encourage you, when you receive our notification for all the right issue and the public offering forms, fill it and send it to us, and we'll continue to reach out to you from SBU's level, and then from your relationship manager to advise you. So our weekly recommendation, we have also extracted some from numerous recommendations, numerous stock we have also sent out. So we have 31 stock extraction. So 1 to 22, we are placing it on buy. Access, EcoBank, Fidelity Bank, First Bank, and other stock. 1 to 22, we place it on buy. By 23 to 29, we also place it on hold. 30 to 31, we also place it on buy. We saw the result of Dangote Sugar coming to the market. and then the earnings per share became negative 23 naira. We've seen that sector facing macroeconomic challenges, and then because of the FX losses. So these are the recommendations. Look at it, and it will guide you in taking your investment decision. In terms of our expectation and projections for the week, we expect more corporate results coming to the market, and the one that we have received so far, the banking is not looking bad, industrial almost flat, but consumer sector is still facing the FS losses. So we expect some of those results that also come into the market across other indices to also have impact on the market, as people will take their decision based on those results that are also coming to the market. We expect investors' confidence to be boosted by pending corporate action, half-year performance. FCMB have released their own, very impressive. Investor confidence will be muted as this week 3B auction is taking place, and then we expect some fund movement to move to that market because of the last 2 weeks MPR hike by the CBN. So that will also move some funds to that segment of the fixed income market. We also increase the uncertainty around the planned windfall tax on the banks. We tracked the return down. People will still be watching the impact of those on the market, especially the banking stock. So, however, we'll continue to encourage you that don't be discouraged with the news that is also filtered into the Nigerian economy. What is very important is using those variables we have highlighted in that recommendation to guide your investment decision, or reach out to your RM, and then we'll continue to advise you where we ask you to buy the one you think you needed more clarity. Also reach out to us. And then finally, this week is not going to be look good for the equities market because of the TB auction that is also taking place. So we expect equities market to end the week on a flat note. So thank you. It's time for the fixed income presentation, and thereafter we entertain question and answer. Good morning, everyone.
Okay, good morning, everyone, and thanks for joining this morning session. So very quickly, we'll rush over the activities that transpired at the fixed income markets for last week. Funding rates in line with our expectations. We had anticipated that the rates would moderate by last week, as at our last meeting, and that was on the back of minimal activities that we expected to happen at the market last week, which was actually the case. Last week was very quiet session in the markets, as there weren't so many activities that took place. But albeit at the close of the week, we saw that the open buyback rates are closed at 25.61, while the overnight rates are closed at 26.06, largely due to improved liquidity in the market. We saw that system liquidity closed at positive 660 billion. However, we expect a turnaround of things this week on the back of the NTB auction holding later in the week. It is worthy to note that last week a normal auction was due to hold, but unfortunately we didn't see any sales on that end due to, I think, we didn't see much interest from investors at that end. So CBN eventually did not sell any deal at the auction. So quickly, the treasury bills markets, we saw that the bearish undertone continued. Despite the liquidity in the market, we would have expected that demand would improve, and then we'd see yield declining. But I guess investors continue to price instrument higher. As at the end of the week, we saw that the yields advanced by 25 basis points, closed at 25.48%. We're likely going to see a sustenance of this, as we expect that the auction result for this week will also further pressure and yields higher on the end of the market. For the almost secondary markets, like I said earlier, we didn't see much activities. Probably if we had seen activity at the auction, that might have fueled some bullish run. But at the end of the week, we saw that the market continued on the bearish trend, closed at 25.27%, which represented about 32 basis points increase from the previous level. Later this week, as earlier mentioned, that's on Wednesday, we expect that an NTB auction will take place where 216.09 billion worth of NTB is on offer. Actually, it's a maturity that will be rolled over. So we expect to see some considerable amount of interest. One, due to the level where our system liquidity is, and secondly, the attractive rates that we've seen at the last auction is expected to also propel interest. So quickly, the bonds market, we understand that we have some corporate clients and institutional clients, because I know that over some couple of weeks ago, about to engage on some of our corporate clients. So I think we're beginning to see some interest in the bonds market. So, but for last week, we saw that the market sustained the bearish trend that it had for the last 2 weeks, and that's not surprising considering that the market is still pricing in the recent hike by the recent MPR hike by the MPC. So we saw the activities improve largely at the long end of the curve, where we're beginning to see that people are front loading their portfolio by demanding higher yields. With what I say expectation that we are likely going to see some level of rate cuts later in the year. Well, the CBN chief had said that all efforts are being taken, are being made rather, to bring down inflation. And as we all know, once inflation is down, we should see a similar trend in MPR. So I believe a number of investors are trying to price in that news. On the back of that, later in the year, we might begin to see a decline or a rate cut. So, but for maturities that we saw much activities on last week, we saw the 27s, the 29s, the 33s, 38s, and the 49s. Those were the maturities that dominated the market in terms of activities. And at the end of the week, we saw that at the end of across the benchmark of yields increased by 32 basis points to close at 19.77. For the foreign exchange markets, it's still quite a dicey one there, as you can see from the colors on the change column. We saw that the official window Naira sustained depreciation to decline by 48 basis points to close at 116 Naira. Sorry, 1,617 Naira 8 kobo. While on the forward contract, we saw some improvements across the 1 and 2 and 6 months, while for the 3 and 1 year, the depreciation continued. But we expect that we should see a turnaround in things this week, as I think that was last week. The CBN said that they would resume sales of forex back to directly to what I say to those who need it now. During Emefiele period, sorry, during the tenure of Emefiele, we saw similar trend where CBN sold the FX directly to the end users. So I think they said they are going to go back to that regime, so as just to ease the liquidity, or the demand pressure that we've seen in recent times. We hope that would bring some form of calm environment to that market, where we should begin to see a turnaround in terms of the strength of the Naira. So expectation for the week, we expect that the funding rates would adjust lower, slightly albeit, and that's on the back of the NTB auction holding this week. We had anticipated that we expect that demand would be high on the back of the levels where liquidity is. So we expect that that would take some considerable chunk of the money in the system. And for the Treasury bill secondary markets, we should see the market should trade on a quiet note, as most investors' attention will be drawn towards or will be focused on the auction holding later in the week. And as we've always emphasized, our products are there, for clients to take advantage of. We understand the challenge as regards the limit or the threshold for a number of clients to go for most of all these the auctions. But these various products have given us have been put in place rather to provide clients with the opportunity of also benefiting from those things in the market, like the fixed income fund. You can see that it's a strictly fixed income fund where each invests largely in fixed income products. With rates being currently high, the yield on this fund is currently above 19%. So it's a very good product for clients to also put their funds in for the lead balance fund. Last week, we saw some traction on this end, because of the downward slope we saw in the equities market. A number of investors had to hedge against their loss by coming into this fund, because it has a mixture of both the fixed income products and the equities product. So while the equities end of the fund might not be doing so well, we see that they get to get some form of cover with the the fixed income component of this. And for the lead dollar fund, you have FX, it's a good way to hedge against the position of the Naira and also to lock in your funds for future FX needs. And for our lead gazelle portfolio, it's a fixed deposit product where clients get to fix their funds for various tenors. It ranges from 90 to 365 days. And we're very certain that our rates are very competitive. Clients who are currently enjoying these products can testify to that. So you're a client to have some idle cash, or you have some funds sitting in your bank account, rather than keeping them there with minimal or no interest. This is a very good product for you to take advantage of. And for Eurobond trading, Eurobond product, it's a dollar fixed income instrument where clients that have significant FX can also take advantage of to invest in. And then coupons are also paid in dollars. I think that's very critical for some clients. They would want their returns to also be paid in the currency they've invested in. So all these areas of products are there for our clients to take advantage of. And if you're interested in any of them, you can always reach out to us. Our numbers, our lines are open, and I'll be there to provide guidance where necessary. So at this point, we've come to the question and answer session. If there are questions, if there are comments, observations, clarity that are required, now is the time to put them forward. You may use the chat box for your questions, to type out your questions, or you may signify by the raise hand icon, so we can unmute you to ask the question directly. Okay, we have someone's hand up. Mr. Ojo, you've been unmuted. You can speak now, sir. Mr. Ojo, you can unmute your mic.
Hello, can you hear me now?
Yes, sir, we can hear you, sir. Good morning, sir.
Okay, good morning. I want to
Morning,
know
sir.
how far can Oando go? Oando.
All right, sir. Good morning, sir. On the Oando, if you look at our recommendation, Oando is not captured there because we have not actually seen the audited accounts for the 2023 that will give us more insight into their performance. What we have seen is unaudited account for the 2023, and audited account is much more important to any other publications or any other corporate actual results that is released to the market. So they gave reasons that their audited account will be delayed and that it will be submitted to the NGX or not before the end of this month. We are waiting for the submission of the audited account that will give our research team the opportunity to see how we to go about the recommendation. And the reason why we have also stayed back on the Oando is because Oando has been involved in so many court cases with the minority shareholders. So, and that court case has not been set aside, it's still lingering. So, of course, in the last judgment, they said they cannot force them to be delisted. But we want those information that will guide our analysis for us to be able to give our recommendation. So we don't know how far Oando is going to go because it's not in our recommendation. Thank you.
All right, thank you for
Okay, thank you.
Okay, hello, good morning, sir. Is honey flour a good buy at this price now?
It's not in our recommendation. So, well, since we have stated it, we'll look at it. But under our coverage, honey flour is not part of our coverage for now. But now that you have brought it forward, we'll do more analysis on honey flour. But there are other companies you can also buy from that consumer sector. Well, I said it that most of the companies under that segment, they are really facing foreign exchange challenges.
Okay, thank you. What is the minimum amount to invest in the lead dollar fixed income fund? With as well as $1,000, you can invest in this fund and take advantage of the benefits inherent therein. But not to limit the minimum threshold to a certain amount. You can invest as high as 5,000, 10,000, depending on your capacity. But with a minimum of $1,000, you can subscribe to the fund. Why do we have so much volatility in the price of UCAP? Is this a time to buy?
Okay, because the price was adjusted last week, don't forget that it was marked on 31st of July because of they did the bonus of 2-for-1 and interim dividend of 90 kobo, and that will be taken out of the price at which the stock closed on 31st. That was the reason why it came down to 10 naira 5 kobo on Wednesday, and then on Thursday it gained 10%, on Friday it gained another 10%. So the valuation has to change. But if you take our recommendation, and we have also stated it clearly that you can also buy UCAP with the current market price. So it's a good buy now.
Second, this is more like a concern. There's so many banks currently in the market to raise funds. And from my past experience, I've been very wary to invest in banking stocks. What is the recommendation?
If you look at our recommendation, that was the reason, or for the banks, we have specific bank under our coverage, and then we've stated their performance. So there's no point to be afraid about investing in the bank, because if you see my first slide presentation, financial service industry continue to enjoy patronage because they are in the service sector, and then they are benefiting from the current federal government policy. So that's the reason why banking sector will continue to do very better. If you check their performance in the last 5 years with what they are doing currently, they are doing better than 2023. 2023 was even better than 2022, and 2022 was even better than 2021. So their performance was more of an improvement on upward trend. So there's no cause for alarm. You can invest in the banking stock as long as you stick to those one we have recommended. And that was the reason we also went further to give scorecard regarding a likelihood impact or performance of this one that have come out to raise money, the likes of Access Bank, GTB, Zenith Bank, FCMB, and Fidelity Bank. So there's no cause for alarm. You can buy them. The one that we will know, we are not sure of their performance based on our valuation, we advise you not to buy it. It's not about just misguiding you. We are guiding you appropriately. Thank you.
Thank you, thanks. When would UCAP bonus be credited to?
We don't have that information now, but now that somebody has asked the question, we'll try and reach out to our contact person at the African Prudential Registrar to have an idea of the time it will be credited.
Okay. How long does the bank recommendation take? 1 week or 2 weeks?
Bank what?
Recommendation, I guess the recommendations of the banking sector.
Well, our recommendation is on weekly. If you look at this thing, we also brought FCMB on board. We also brought ETI because we have also seen their performance based on some of those financial metrics that that can be used to adjudge the future expectation and the future dividend payment of all these banks. So we change it on weekly and even on daily basis. When our daily market report goes out, you also see we are changing some of those recommendations. It's not as if some are just there forever. We change them on daily, on weekly. Thank you.
All right, thanks. BK, you can now unmute to ask your question.
Hello, good morning once again. I hope you could hear me.
Yes, sir, we can hear you loud and clear, sir.
Hello? Okay.
Yes, sir, okay. You
so in the first instance, I want to, in behalf of myself and other clients there, to appreciate your efforts, the management and the operational team, that despite the inclement economic climate in the country, you still continue to educate us, to brief us where to go, how to tread. I sincerely give appreciation for that.
Thank you, sir.
On the second note, I just feel worried about what is going on in the banking industry now. You may have followed the trend of conflicting interest between the First Bank and the rest of the banks. Is it not possible we have such negative impact of this situation on banking industry as a whole? If there is, what will you advise that we do? What will we advise that you do in that instance? Thank you.
So the first bank, sir, is it in terms of is it the fraud that move into the economy and then the information about somebody doing fraud or something, sir? Okay, sir. So for the banks, I think the only thing we can use to I mean to give insight into those recommendations is the result of the company audited results. You know, so when somebody asks question about Wando, I said we don't know how far that stock is going to go because we believe the regulatory environment is very strict now. That company needs to comply with their filings and regulatory requirements. So for the banks, whether there have been news that some people are using money to buy private jets and all that. For the banks we have covered, we have looked at their financials and then we can stick to it and we can advise you that you don't need to be afraid about investing in the banking stock because the banks they've been involved in numerous businesses. They're into pension, they're into asset management, they have microfinance banks, and they have a payment platform. These are the things that is bringing income for them. So it's not about financial engineering. So those income they are making, they are genuine income, and they are subject to confirmation by the regulatory body. There are so many bodies that is regulating banking industry. The CBN is there, SEC is there, NGS is there. So we are working with those information, with those data and the performance of this company. So it's not all the banks we are recommending, but the banks we are recommending, we have x-ray the performance year on year, quarter on quarter, and then before we come out with that recommendation. So, but we're still going to look further. If we have anything that we think is going to affect their performance and the expectation, of course, we'll communicate to the house accordingly. Thank you, sir. So we have come to the end of presentation. So we want to thank you again for taking out of your limited time to attend this morning market section. So thank you very much. We wish you a lovely day and rest of the day. Thank you very much. Do have a good evening, sir.